Hi everybody, welcome to another update on the gold forecaster index, the holy grail to predicting gold prices. In my last video, I said that June would not be a great month to buy gold. So how has gold been doing? It has gone down from 1950 to 1940. Actually, not that bad. It has actually been very strong. So we are now coming into July, which is the bottom of the seasonality. So I think it should be doing well going forward. It's at least one positive sign, positive indicator for gold. The seasonality is bottoming out. So what is our new data point on the gold forecaster index, which is using leading indicators to predict the gold price? We have the following data point, and it's actually going down, which is not good. So I expect more weakness in gold based on this gold forecaster index. So we need to be patient going forward. Nothing to do about that. This is the same unemployment rate slowly moving up, but it's not moving up very fast. I still think that it will move up at some point. So this chart should go back up together with gold. GLD, not looking good. The funds are actually selling gold right now. Not sure why. They don't see any upside in gold, probably. Not good. COMEX also almost rolling over here. So that's also not good for gold. LBMA levels also moving lower. So on the institutional side, not good. China, however, has had more demand. So demand is up from last month. So that's good, except the long-term trend is actually topping out. So that's also a bad sign. You need to see this go higher. Silver, yeah, silver has done nothing. It's just flat. The ETFs are flat. So there's no silver squeeze at all. Here as well, demand is lower for China on silver. COMEX still in a downtrend. US mint sales are also not good, going down. So a lot of bad signs for gold, actually. Premiums on silver were actually also down. This is an old chart. Junk silver, yeah, at 40%. So premiums are also down on junk silver. So not looking good for silver. There's one good thing. The Shanghai gold premiums in China are up. So 0.7% is pretty high historically. So the Chinese do see some value in gold. That's one good sign, at least. So this is Shanghai gold premiums. Typically, if it's above zero, then you should buy gold. So here we had the first spike in gold, was a very negative premium. So this was a top. Now the second top is around zero premiums, so also a top. Now the third top, we do see some positive premiums. So maybe this top could bottom out. At least this stop is not the same as this stop. Upmex gold premiums are stable, higher than in 2015. PSLV premiums were still negative. Open interest is down, so not a lot of interest in gold currently, which is actually a very good contrarian indicator to buy it. But yeah, there could be some weakness. So this trend is still moving up, so gold could still move down. When we look at the COT report here as well, this is still in an uptrend, so silver could still move down short term. Lease rates were actually positive. So here you see up, down, up. Now we should be going back down. So this is then down, up, down, and we should go up at least for the next month. And then we will see again. Silver, however, is doing the opposite. So here we are already going down. So this is probably going to move lower for silver. And when we take a look at silver, you can actually probably see, yeah, it's down 2%. That's significant. Not good. I think it will go lower on silver. This is amazing. Tips going down that much, but gold is actually pretty strong when you compare this with the tips. Yeah, I don't know why, but gold is really strong. Also, real yields going positive, and gold is still very strong. Okay, on to seasonality. We know that July is typically the bottom, and then it will soar higher until October. We are currently July the 6th, so it's only going to move higher, hopefully. Same with silver. Should be, well, it's actually going to be flat. Silver seasonality is best in January. So probably not a lot of upside. You can also see Nano chart is pretty flat, so don't expect too much upside on gold, but it will probably move up very slowly. What's the sentiment on gold right now? It's very bad, so going down, and we are currently here. So there could be some more downside, and at some point it will bottom out, go back up, and then it's time to buy. So I think, yeah, it could still go lower and then wait for a reversal. But July should be actually a good month to buy. Currency in circulation is still moving up. Gold is undervalued. This ratio here is still going lower. That's not good. We need to see this bottom out. So yeah, typically it bottoms out around the 1 level. So I'm hoping this can bottom out very soon. Let's see Google Trends. Google Trends is down. So July is lower than June, but it's still high. But yeah, the interest is coming down in gold. Debt should be moving higher, so that's good for gold. Near-term forward spread is still in the negative. And as you know, when we are in the negative, then gold typically moves higher. And I think this could go even more negative, and I will talk about that later on. But keep this chart in mind. Every time we are negative, gold should move higher. Rate hikes, I think more rate hikes will come, and I will explain that later on. But if they stop the rate hikes, then gold will move higher. Let's take a look at the 2-year yield today. It's moving up. That's not good. That means that the Fed will need to hike rates again at the next meeting. I added some charts here. Bank term funding program. If this moves up, then that's good for gold because of deposit outflows, but it has stabilized lately. Let's see if this moves up. I also added the second central bank balance sheet here. Apparently there is the FHLB central bank. I call it the second central bank. And as this moves higher, that means that there is some stress in the market. So watch this one. If this moves even higher, then that should be good for gold. Let's take a look at copper as well. We like copper, so let's see if anything has changed here. Yields up should be good for copper. That means the economy is doing well. We need to see the global inventories come down. So it's still coming down. So as long as this keeps dropping, then we're safe in copper. If this starts to move up like this, then we have a problem. But let's continue to monitor this. Should look like this. Credit impulse data we don't have yet. Should be out soon. Shanghai is still stable, still doing this triangle, and we will have a big move soon. GDP is still positive, but not here. It's actually at 0. Yeah, but copper in the long run is probably going to do well. A lot of demand, less supply. So scrap copper is coming into the market again, but we're still oversupplied in scrap. So there could be some more downside in copper, probably to 3.6. We will monitor this. Other than this, China imports are actually positive. That's good. Yeah, you can see here imports of copper ores and concentrates are moving up. Yeah, Danny says that stocks will go up. Inflation, do we have inflation still? You can see that PPI is coming down, but look at the 10-year break-even inflation. It's actually moving up. So we are not in deflation yet. I still think we are in inflation, and in inflation you should own gold and avoid bonds, which I will talk about later on. There's an update here on the Brave Butter Skelly index. It's positive, so yeah, the economy is doing surprisingly well. That's why gold is not that strong. Yeah, it is what it is. Economy seems to be pretty strong. We also had some good jobs data today. So that's the the data that we see. Not that bad. Let's take a look at the money supply. How is that doing? Money supply has actually moved higher. So the purple line has gone up in May. Maybe we have a bottom in money supply and we could go higher, which is good for gold. Balance sheet of the central banks are all going down. So they're doing QT, probably because there's so much inflation in the system that they need to try to get it down. Deficits, budget deficits went up a bit. Goods deficits, yeah, still pretty high, but the services are actually in surplus. On this chart, we see that the deficits will probably keep rising. This trend is going back down. So I expect higher deficits. Prices are coming down. That's disinflationary. Here as well, prices are coming down, which is not good for gold. Imports still higher than exports, so there are deficits. Yeah, we talked about this before. Capacity utilization, let's see. If it's above 80, then we should be positive. Yeah, this is the wrong chart. I need this one. Capacity utilization is stable at 79.6. There's still inflation in the system. Foreigners are not buying that much debt, so it's going down. They're still buying, but as a percentage of total debt, it is moving lower. And that's why bond yields are now rising. This is extremely important to watch. Bond yields are now skyrocketing. That means that foreigners are not buying those bonds as much as Powell hoped for. Powell is also selling bonds. So that's what now is happening. Bond yields could spike to 6%. And I have warned about that. So what I would never buy at this moment is bonds. I think this can spike to 6% because the Fed is not buying those bonds anymore. And foreigners also are not interested in those bonds. So are we going to buy these bonds or not? Well, you can look at this. This is the stocks vs bonds valuation. If this chart is below zero, then you should buy stocks. If this chart is above zero, like here in 2000, then you should buy bonds. And bonds have done very well since 2000. Bond yields went down, so you would have made a lot of money. Today, bonds are overvalued, right? This can still move up. Probably bonds would go to 6-7%, and then it's time to buy. But now I would avoid bonds. And looking at bonds, I also want to mention the MV is PQ equation, which is very important to understand. The economy is based on this equation. So this is GDP, which is prices times the quantity of goods. And this is money supply times velocity. Now, velocity you can just estimate by looking at the bond yields. You can see here the bond yields coming down, and now bond yields are starting to move up again. If this goes to 6%, then velocity will probably move up again, more money coming into the system. So we have a situation where velocity is moving higher. So V goes up. So one of these shall also go up, and Q is not going up because the economy is not doing that well. So not a lot of goods transactions. So the price level will go up. That's inflation. So what does the Fed do then? They can decrease the money supply. And how can you decrease the money supply? You can, for example, increase the reserve ratio. And there's a nice equation for that. How can you decrease M? You can do that by adding more deposits or reducing the currency in circulation, or you can increase the reserve ratio or increase the excess reserves. It's all very difficult to understand, but they need to decrease the M by hiking rates. So that's what they are doing. They are now hiking rates, trying to reduce inflation, reduce the P. So that's the situation that they are in right now. And when we look at the 2-year yields, you can see that it's moving higher. So the 2-year yield is now telling the Fed to actually hike rates, and they are going to do that until we get into a recession and until banks crash and until the stock market crashes. So it's a very difficult situation right now. To hike or not to hike, inflation or no inflation, recession or no recession. So it's not going to get easier. And this chart illustrates that. We are now in declining population, and this typically correlates with an inverted yield curve. And we are going to get an even more inverted yield curve because of this. And what does this mean? Inverted yield curve means that the Fed will raise rates higher than the bond yields. So that's how yield curves invert. This chart also tells us that yield curves will invert. So when does this invert? That inverts when the inventory of homes goes up, availability of supply goes up. We are currently somewhere here. So at some point that supply will go up and the yield curve will go even down more than it is right now. So something is going to break. So this is the housing inventory. It's still lower than this level. Same here. This is the housing inventory supply. It's very low. So at some point, this will move up. And as this moves up, yield curves invert. Up, down, up, down. Okay. So we expect the yield curve to invert. We expect more rate hikes and higher bond yields. So keep that in mind. We don't like bonds, okay? And the opposite of bonds is gold. We all know that. So I'm going to show you again this nice table. The opposite of bonds, which is deflation, is gold. That's the opposite of bonds. Gold protects you against inflation, and we are now in inflation. Not sure about if we are in growth or stagnation. Currently, probably there's a little bit of growth, but I think this can go to stagnation very fast in a few months. So I would be in gold right now because this is the safest asset. Bonds are overvalued, stocks look also overvalued, and cash, I wouldn't buy cash because we are not in deflation yet. Okay, another nice chart. So this is a chart of gold holdings at the Federal Bank of New York of foreigners, so foreign gold deposits. And this has always gone down, as you can see here. But lately, in the last 3 months, the holdings are going up again, which is very significant because that means that these countries are buying gold again. Yes, they are buying gold again. So I think these are the developed markets because I don't think China and India and Russia will put their gold at the Federal Reserve Bank of New York. So look at the developed markets. This went down from 2000 until 2008, and it went down even more in 2015, like here, right? And now I think this is starting to move back up based on the latest data. So monitor this chart. You can find this online. And if this moves up, then you know what to do. Now, why are these central banks buying gold? Because gold is money. You can watch this series of seminars. Gold depends on 4 prices of money. First one was par, and then exchange rates, interest rates, and then commodity prices. So those are the 4 prices of money. So when people tell you that gold depends on supply and demand, no, I don't think that's correct because there's a lot of stock of gold above ground. So demand and supply wouldn't change that much. So there's a high stock to flow. High stock to flow ratio. High stock and less flow. Same for silver. Silver has also a high stock to flow ratio. A lot of above ground silver, but not a lot of demand and supply. So silver is also monetary. So these two are monetary and are more affected by the 4 prices of money, which are interest rates, par value, exchange rates, and the commodity prices. Now, these here, those are real commodities. They depend on supply and demand. So if demand goes up, then copper will go up. And if supply goes up, then copper will go down. Not the same with gold and silver. Keep that in mind. Now, let's talk a bit about seasonality as well. Gold should be moving higher. And you can see that there's a correlation here. So gold went up as seasonality went up. Then we have a dip to March, and then it rises again, then dips a bit in June, and now we should be moving higher. So there's a high probability that gold will move up right now. Natural gas, I think this chart is very nice. This is the seasonality chart, and natural gas just follows it. Even this spike up is forecasted by the seasonality. Then we went up here, and now in July we will dip again until September. So I would not be buying natural gas right now. Very nice. Look at the seasonalities. And I just wanted to end with Yevgeny's forecast. Apparently, stocks will rise in the next 2 years. Well, maybe. We're in inflation and stocks like inflationary environments. Also, employment is pretty okay. And the Brave Butter Kelly index is also positive. So maybe we should be in stocks and also in gold at the same time. And that's my assessment for this video. So going forward, I think we should start nibbling in gold miners as well. But of course, only buy the gold miners that have good earnings. And there are not a lot of them. You know that I like Soma Gold, and they had production numbers very good, above estimates, and I'm going to keep on holding that. So that was the video, and I'll see you in the next one. Bye.